How to protect your wealth against inflation. Proven strategies for 2025. Inflation is on the rise, and if you want to protect your wealth, you need to act strategically. Today, we'll cover 5 expert strategies to secure and grow your wealth in 2025. Let's dive in. Strategy 1. Acquire cash flow assets. Our first strategy, cash flow assets. Investing in profitable businesses with steady revenue is one of the best defenses against inflation. Why? Because when prices go up, successful businesses can adjust accordingly, keeping revenue strong. Focus on sectors with consistent demand, like healthcare, logistics, and infrastructure. By owning cash-flowing assets, you not only guard against inflation, but create a growth engine that builds resilience in your portfolio. Quick tip: look for businesses with loyal customers and reliable revenue streams. Strategy 2. Invest in inflation-protected securities. Next, consider inflation-protected securities, like Treasury inflation-protected securities. Tips. Tips are bonds that automatically adjust with inflation, so your investment grows alongside the consumer price index. It's a straightforward way to protect your purchasing power, and by laddering tips with staggered maturities, you secure steady income with flexibility to respond to shifts in the market. Quick tip: laddering tips gives you inflation protection and regular income. Strategy 3. Commodities and precious metals. Commodities are a classic inflation hedge. Assets like gold and silver have held their value for centuries, making them a reliable store of wealth. When fiat currency weakens, these tangible assets stand firm. Consider adding a mix of commodities beyond just metals. Think about oil or agricultural commodities. They help create a counterbalance to inflation, adding resilience to your portfolio. Pro insight: gold and silver are great, but diversifying with other commodities strengthens your protection. Strategy 4. Digital assets with stability, data storage and infrastructure. As digital assets evolve, there's more to explore than just cryptocurrency. Look at digital infrastructure like data storage and cloud services. These assets are critical in our digital economy, and demand is only growing. For instance, data center rights offer steady income tied to the demand for storage. Investing in digital infrastructure means you're tapping into a stable, high-demand sector with real growth potential. In a digital-driven world, this is a smart hedge against inflation. Pro insight: data center rights offer stable income and growth in the digital age. Conclusion: securing your wealth against inflation requires more than traditional strategies. By focusing on cash flow assets, inflation-protected securities, commodities, and stable digital assets, you create a portfolio that grows and adapts to economic conditions. These aren't just hedges, they're strategies for long-term resilience and success. If this helped you, subscribe to Landmark Capital for more tips on building wealth in changing times. Let's make 2025 your strongest financial year yet.